Okay, you guys, we'll now start back with the problem 10-2A on page 448. What I did mention that the employer will pay, there's some taxes that they have to match that are withheld from the employee's checks. Those are Social Security and Medicare, our FICA taxes. But there are two taxes I didn't mention in the lecture video that the employer has to pay based on payroll that the employee does not have to pay. Now, the employee can benefit from them, possibly, but they don't have to pay them. Those are both federal and state unemployment taxes. The employer pays those based on payroll, but they're not withheld from the employee's checks. So let's look at our two journal entries here, and you probably noticed that we're only going to do instruction 2. That's because on some of these withholdings there are limits. I mentioned employees only pay taxes on the first $113,000 they pay as far as Social Security goes each year. And then there's also a limit on federal and state unemployment. So we're going to do instruction 2 where the payroll is paid the first week of the new year, so those limits don't come into play. Okay, so let's read through the problem, 488 and 489. The following information about the payroll for the week ended December 30th was obtained from the records of Qualitech Company. Okay, on the left-hand column they list salaries, and those are gross salaries by department. So that's sales salaries, that's salaries for the entire department for this pay period, $350,000. Salaries in the entire warehouse at gross, not net pay, but gross, are $180,000. Salaries in the entire office for this pay period at gross are $145,000. So salaries, our gross salaries total $675,000. Then they list in the right-hand column deductions. I've been calling those withholdings. Some of these I'll give you on the test. You would have to be given income tax withheld. We're going to assume that's all federal. And obviously this company is in a state that doesn't have state income tax. Social Security and Medicare, I'll give you the rates for those. Notice they're given below under tax rates assumed. But I won't give you the amounts on the final. You'll have to calculate those using the rate times total salaries. You'll see how we do it here in the problem. U.S. savings bonds, that's where they're allowing their employees to withhold from their checks to buy U.S. savings bonds. That's just a form of savings. I'd have to give you that amount if it were on there, and then also I'd have to give you an amount for group insurance withholdings if that one was on there as well. The only ones you'll have to calculate in the first journal entry are Social Security and Medicare. And then notice they give us the tax rates assumed. This annoys me. The actual Social Security rate is 6.2%, and the actual Medicare rate is 1.45%. I'm not sure why they don't give you the actual rates. I will give you the actual rates on the final, and you'll use those to make your calculations. They give you a state unemployment rate for 5.4% and the federal unemployment rate at 0.8%. Those will vary by business depending on the amount of unemployment claims they've had in the past, or at least that's my understanding. So now let's go to instruction 2. They say, assuming the payroll for the last week of the year is to be paid on January 5th of the following fiscal or business year, journalize the following entries. Okay, on December 30th to record the payroll. Now those limits go by when the payroll was distributed, not when the employees worked. So the limits won't come into play here, and they won't on your final as well, or either. So on December 30th, we're going to debit sales salaries expense for gross salaries in the sales department, and that's $350,000. Okay, and then for warehouse salaries at gross, we're going to debit those to warehouse salaries expense. Then we're going to debit office salaries expense. For gross wages in the office, which were $145,000. These are all expense accounts that increased. Remember, they increase on the debit side. And the increase in the expense for the employer is for the gross salaries, not net pay. Okay. Now, for the deductions or withholdings, we're going to credit those to liability accounts. Income tax withheld, we're going to call that employees. Income tax payable. We put employees' income tax payable and not just income tax payable, so that we know it was withheld from the employees' checks and not what the employer owes based on their profits or taxable income. The amount withheld here in total, company-wide, $118,800 or $118,800. Then we're going to credit Social Security tax payable for Social Security tax withheld from the employee's checks. But remember, I said I won't give you that amount. They give it to you, $40,500. On the test, you'll have to calculate it, and you'll do that by taking total salaries, which are $675,000. So they have those totaled for you, times our Social Security rate, which is 6% or 0.06. Common mistake would be to put in 0.6. But remember, 6% is 0.06. And you get the $40,500, which does match the one in your book. But you won't be given that amount on the test. You'll have to calculate it. The next thing withheld was Medicare. We're going to credit Medicare tax payable. You'll have to calculate this one as well. Again, it's total salary, $675,000, times our Medicare rate that they give us is 1.5%, so times 0.015. 0.15 would be 15%, and you get the $10,125. Again, I'll give you the actual Social Security and Medicare rates on the test. We're going to credit bond deductions payable for what was withheld to purchase U.S. savings bonds, $14,850. Then we're going to credit group insurance payable for what was withheld to purchase group insurance for the employees. That's $12,150. Okay, so here, you guys, we have gross pay company-wide. Here we have our withholdings company-wide. Gross pay minus withholdings gives us net pay, or what it would be the total of all the checks cut to the employees company-wide. Total net pay company-wide. And for that, we're going to, it's a liability for us as well, we're going to credit salaries payable. Okay, I'm going to do it like this. I'm going to say equals 350 plus 180 plus 145 minus 118,800 minus 40,500 minus 10,125 minus 14,850 minus 12,150, and we get 478,575 is net pay, or a credit to salaries payable, what the company actually owes the employees for this payroll period, which, as you see, is quite a bit less than gross pay of $675,000. Then we'll do the second entry and wrap this. Or I'll tell you what, let's finish it in this one. Also, so our next entry on number 2, it's on January 5th. We need to make an entry to record the employer's payroll taxes on the payroll to be paid on January 5th. Because it's a new fiscal year, all of the $675,000 in salaries is subject to unemployment compensation taxes, as I mentioned earlier. So we'll date this one January 5th. And our debit at this time is going to be to payroll tax expense. We just don't know the amount yet, so we'll come back to it. Now from up here, the employer is going to have to match Social Security and Medicare dollar for dollar. It's withheld from the employee's checks, and the employer has to pay that in as well. So I'm just going to copy these and paste them in right here. Not only is it withheld from the employee's checks, it's also matched by the employer. Now we have two taxes that the employer has to pay based on payroll that the employee does not have to pay. It's not withheld from the employee's checks. State and federal unemployment. I'm going to start with state unemployment tax payable. Okay, this is another one you'll have to calculate. We're going to say total salary $675,000 times the state rate, which is 0.054 or 5.4%. That gets us $36,450. Then we're going to credit federal unemployment tax payable for total salaries $675,000 times the federal rate, which is 0.8%, so that's times 0.008. That gets us $5,400. Now to get the debit to payroll tax expense, we're just going to add these together. So I'm going to hit sum. We get a debit of $92,475 to payroll tax expense. Okay, that's it for the problem 10.2a. Now for your homework, you'll do problem 10.2b, and there you'll only do instruction 2 so that those annual limits don't come into play in that problem either. What else? Let me mention this to you. Please notice on this problem that all of the debits end with the word expense. We're increasing an expense. So be sure and include the word expense. Don't just put sales salaries or warehouse salaries. Because with all the debits on this problem, we're increasing an expense account. Notice with all the credits on this problem, they all end with the word payable. Because with all the credits, we're increasing the balance of a current liability. Liabilities increase on the credit side, expenses increase on the debit side. If you leave off the word payable, if you leave off the word expense, it will be counted off on the test. These account titles need to be correct on the test. Okay, thanks a lot. Good luck with the homework.